Alright, so I'm going to be pretty much breaking down UJ's previous move on how you could have easily caught that. There's a perfect example of a breakup structure and a retest on a higher low point. So pretty much starting off here at the daily time frame, look at the moving averages, blue over red the entire time being maintained. And each one of these bearish candles is a little bit of pullback for that day, which is fine. Also could be higher low points. But overall, moving averages are blue over red, meaning there's more bullish momentum in the market. So going down the 4-hour time frame, once it did pretty much reach this area of resistance where I had this orange box, which I don't know if it's going to load right here, is pretty much, yeah, I don't know why it's not loading. My internet's just horrible. But anyways, as you can see right here is pretty much a huge area where the market, you know, month after month after month, it just completely rejected this price range. So we're kind of coming to the top of this box here pretty soon. So once the market did reach this area, I was expecting some sort of pullback. So that's exactly what had happened. So now breaking it down to the hour time frame, for me to actually catch these small counter trends, I was basing it off of the hour time frame. Like I caught this right here, caught this right here as well. Always closing after I saw an opportunity to close, just because I knew overall the market was uptrending. But pretty much, as you can see, here was a break of support along with the retest where this orange line is, and that's pretty much what kind of started this bearish momentum over here. So if we go down to the M15 time frame, what could have helped you catch this buy, obviously looking at the smaller time frames. So once the market did reach this area of support right here, like I said, always want to draw your random lines and support and resistance areas on lower time frames based on the median of the wicks. So as you can see right here, could be a small lower high point here as well, right? So we have lower high, lower low, then lower high, then a low. And the market formed a higher high, breaking structure. One, it broke our previous lower low point or lower high point, and it broke this area of resistance, right? So let's go over that again. Lower low, lower high, lower low, lower high, and then the market formed a low, breaking the previous lower high, forming a higher high. So now you're no longer looking at sell opportunities, you're looking for buy opportunities. So once the market did break structure, you could have easily pulled out your fibs. Point A at this bullish candle wick, point B at this bullish candle wick, and as you can see, it came all the way down to 61.80. Then once it did close bullish engulfing, such as it did right here, you could have made an entry there. So let's put the, oh, one thing to look at. All right, so we're risking about 6 pips for an overall reward of anywhere between 14 to 23 to 30. So that is a pretty good risk to reward ratio. As you can see, it is a 5.63 risk to reward ratio. So one thing I always recommend doing is once you set your order on MetaTrader 4, set your stop loss, set your take profit, and then close them, and then close MT4, and then just look at the trading view long and short positions, because that'll help you pretty much control your emotions, because you're not looking at the money you're potentially making or potentially losing. So everything as to why you close an order or enter an order is based off of technical analysis, of course a little bit of fundamental analysis as well. But overall, as you can see, then the market maintained uptrend structure, forming a higher high, and then came back down to form a higher low point once this previous area of resistance was retested, as you can see right here. Then continued on its bullish run, I guess you could say. So that was fairly simple on catching that move. You could have caught anywhere between 30 to 40 pips. You know, if you would have held that order, then you know you'd probably be in profit around 80-ish pips right now. So yeah, around 75 pips. So if we go to the hour time frame, let's see where our entry is. So through that, through that. So our entry point is right here in the middle of this bullish candle. You know, for extra confirmation as well, you could have definitely entered in order once this bullish candle did close, just because it closed bullish engulfing with very little exhaustion towards the top as well. So hopefully this video did help you guys out a little bit as to your market structure and making an entry. But overall, you know, you want to wait for a retest anytime. If there's no retest and you don't want to do an entry. So yeah, hopefully you guys did enjoy this video and it did help you. Email me if you have any questions, of course.